Along Live. We're here daily from 9 a.m. to 12 noon. We're looking to do 2, 3, 4, 5 trades based on a price action trading strategy and key proprietary scalping levels and zones in the S&P 500 E-mini. If you're coming in as a guest and you're a new trader, stick around. If you need trading software, let us know. We can set you up with an opportunity to receive a trading platform with real-time data, an opportunity to practice trade against that real-time data. That's a great place to start. Second great place to start is to learn how to trade and get to the heart of the action, which is the price action level of the trade. We do that every day here based on this Trade Along Live session. This is an educational only session. We do have a trading academy for individuals that are looking to learn the nuance of the entries, exits, and stops. We do that in the Trade Along Trading Academy. The website is tradealongtradingacademy.com, tradealongtradingacademy.com. Go to the website, you can view the offers and services here that we do on a daily basis. Offer on a daily basis. It's really focused on your ability to be able to go to your screen and make money this morning and come out at the 12 noon hour happy with your trading. This concept was developed because traders didn't have somebody that would step up and set up a opportunity, which we call this concept in Zoom Trade Along Live, where individuals from around the globe come in. They're able to work the morning session based on their trading with Sol as their guide. They're able to receive his proprietary scalping levels, his pivot, Sol's pivot, his other levels, Sol's other levels, on top and bottom of that pivot as opportunity points for this morning's trade. You can interact with Sol. You can ask him questions. You can talk about the trade, the action of price, the interaction of price against his pre-mapped out levels. The feedback that we get is, and we thank you for it, is that Sol's levels are really good. He calls them levels and zones for a reason, which means that there's an adaptation to what those levels and zones mean during the morning session. So when he pops in here, he's going to give out his levels and zones. He's going to give you in audio his pivot, price, and other levels on top and bottom of that pivot for this morning session. Then he is going to let the cash market open. He's going to do on his side of the equation, his trading side, a assessment, a risk assessment for himself based on the action of price during this session and how it relates to his pre-mapped out proprietary scalping levels that he gives out to you from a teaching perspective. You're also going to be able to listen and interact with Sol during the morning session to your benefit when it comes to the action of putting trades on and taking trades off. So it is a very structured and unique opportunity for traders to be disciplined, to have key areas to pay attention to, what to do with those key areas based on the action of price. And this is an opportunity from a subscription service point of view for those traders that are looking to come out of this trading session a better trader than yesterday's trading session and look to bank their money for the day. The Trading Academy part of this business is linked to the Trade Along Live session. How it's linked is we have traders that are coming into the service that are unsure of their trading abilities, are looking for somebody to help them put it all together for themselves. They could certainly look to add in Sol's price action trading strategy if they so chose, based on Sol's teaching in the Trading Academy. And that's what we do every day. So the morning session here is dedicated to the Trade Along Live session, which is a separate subscription in the Academy. It's a standalone, and that is detailed on the website, tradealongtradingacademy.com. And if you would like, you can be part of his bundle, which gives you his attention and education in a private Zoom room, where he takes you or looks to take you from where you are to where you'd like to be based on these services in trading. And the goal here is to help you develop consistent profitability and become the best trader you can be in the Trading Academy, and then have access based on that bundle to the Trade Along Live session, this session on a daily basis, as a proving ground and an access point to Sol. So there's two ways to subscribe. One is the standalone, and that's monthly. And you'll see that on the website. So check it out. Or you could do the bundle, where you get the best of both worlds. You get to be taught, adjusted, and tweaked. Come in here as the access point and the proving ground to what you're learning, and then go back into class with Sol as you are getting better and better at your trading. And that's the plan. That's what we do every day. Hey, Mark, how are you? Hey, Mark, you're all set up and ready to go? Do I have to move you over, or you're all set up with your camera and your mic? I can't wait for you to try out that new headset. Hey, Don, how are you? You know, I won't know because of the holiday, but I think so. I haven't heard different. But we can always get your profile up and ready to go. Just plug everything in and you'll be in good shape. Hey, Don, how are you? Chad, how are you? Hey, Chad, I got to give you the keys to the private Zoom room for class. Anon, you have it already. I know he's going to start working some scheduling. Hey, David, how are you? David. Hey, Dean, Don, Edward, Frank. Hey, Glenn, James, Johnny Z. Hey, Julio, KG, Kurt. Hey, Michael, Mike, Pat. Hey, Robert, how are you? Roop, Russell, Timothy, and Yee, welcome back. Welcome aboard. So what do we got going here? Sol's should be stopping in. Waiting for her to pick up the mic. Check out the website, tradealongtradingacademy.com, for your selection of which way you'd like to go based on these services. I like the bundle. Again, that gives you the opportunity to take yourself from where you are to where you'd like to be. Getting yourself tuned up. It's like going in for a tune-up. And you may add a few things in there, and then you come in here as a proving ground and an access point to Sol as you are tuning up your skills. Hey, Chad. Yeah, I'll send it out to you today.
Good morning, everyone. Can everybody hear me all right? All right, let's give you our levels here. Our pivot this morning is 46.46, 46.46. Resistance at 55.65. 74.85. Support below at 39, 31, 24, 18, and 06. Pivot 46, resistance at 55, 65, 74, 85. Support below at 39, 31, 24, 18, and 06. All right. We are on the heels of a big low volume craziness that happened on right between Friday of Thanksgiving and weekend. And that resulted in some craziness and a little bit of a bounce back here, maybe from the lack of volatility. So we'll see what happens today. So be a little bit careful here with the traders coming back from the long weekend and trying to decide what to do or not to do after the big sell-off on Friday. A little dead cat bounce, I don't know. Maybe a little overreaction on Friday, I don't know. We'll see what happens, but be a little bit careful in regards to your number of your stops, I should say. Also your number of contracts because of the volatility that's been injected here into the market. Bond market also reacting inversely to S&Ps on Friday as they rallied, got up to, they were 1.6 Friday. So into the news of the Omicron or X-Micron new strain of COVID that has hit us, or hit that's what they found anyway. So we'll see what happens as we drifted up back down here to the drift down here back down to we got 39 here. Remember, keep your stops in place. We are trading mini S&Ps here, looking for opportunities to scalp the market off of these levels that we just gave out, in addition to price action opportunities that occur once the market paints some bars. A combination of both gives us our setups to trade. And stops today probably have to be a little bit on the high side off of the ridiculousness from Friday. So we'll see what they should be. Probably right now 6 to 5, maybe even more than that. Again, based on volatility, and we don't know what's going to happen here. So keep that in mind if you're trading, and consequently, if you're trading more than one contract, lower your contract size here to something that's adaptable to the market, considering the volatility as we come down here and test the 39 area. So keep your stops in place. Again, we don't love any trades. We are just trading the market as it gives us the opportunity to, as we come down here to the 39. Again, looking to scalp the market off of these levels that we have. So trying to take, at this point, probably you're looking for probably 5 points on these trades, maybe with the same amount of stops right now, anywhere in that range, and if it's a little bit too volatile for you right now, then I get it. Then just be patient and wait till the volatility is trading at 24 right now. The VIX is trading at 24, so it's way up there. Probably a lot higher, was a lot higher Friday afternoon, but that's okay. We have to deal with what we have right now in front of us, right? And again, if the volatility is too great, or the VIX is too high, and you're a little bit nervous about it, just be patient and wait for everything to settle down quite a bit here. And it might take a day or two or not. So you never know, right? We never know how the volatility kind of calms down. No, I was too tired there, Don, to be honest with you. I had a long weekend from, I was very busy over the holiday. So, I just took I actually really did take the day off on Friday. I was why, like, obviously I woke up and I heard what's going on, and believe me, my first instinct was to jump in there and start trading, but I'm like, you know what, I'm just not going to do it. With the light volume probably, and a lot of volatility, it was probably just some crazy moves, as you can see here by the hourly bars Friday. But hey, it is what it is. So your scales also are, you have to scale them according to the market and what they're doing. So 1 point probably is not enough to scale in. You're probably scaling in about 2 points. Again, if it's the volatility is just too great right now, just be patient and wait for it to settle down, and then trade it accordingly. And markets are going to settle down. They're not always going to be nuts, as we've gone through cycles before. And so you have to trade them according to your risk tolerance, right? I mean, everybody's got different risk tolerances here, so it's not like everybody trades the same. We're testing this 39 area again. Maybe scaled in differently. Your scales have to be spread apart a little bit as well, and then how you manage getting out of those trades is up to the individual, right? I mean, everybody trades them just damn much differently, and so trade them according to your risk tolerance. Welcome to some of the new folks that are here. We are trading mini S&Ps. We're scalping the market, like I said. If you have any questions, put them in the chat box area. And if you do, look at the chat box area right now. You'll see the levels that we gave out this morning attached to it. They're there as a guide for the day. We can adjust those. We can tweak those. We can add to them, subtract from them, all dependent on price action and price volatility. That's what we're doing here on an everyday basis. And we are also dependent on market conditions, right? We have to adjust to volatility, like I've been talking about here, to what the market is going to do to us, and then how fast it moves and how much volume's in there. All of these things are part of the bigger picture that we have to look at as an individual trader to adjust the market to conditions that are suitable for your risk tolerance. And everybody has different risk tolerances here, as you can imagine. Not everybody trades the same. So keep that in mind. As we are just hovering around this 39 area here, just kind of hanging. So again, patience is important, and waiting for the opportunities. And also, if you don't like the price action, it gave you ample opportunities to exit the trade. And maybe you scaled in different and took some profits off of the scale on the downside. Again, it's giving you chances to do different things with the trade here. There's no, if you don't like the way it's acting, it's giving you a chance to exit some of your contracts. If you have multiple contracts you got into, everybody trades, like I said, differently, so you have to adjust accordingly. Spiking up here a little bit, again, giving you a little bit. Again, how you scaled in. If you scaled in a little bit lower than that, obviously, maybe you got four points on the trade here. Again, everybody does it differently, so no one way is perfectly correct. And let's see here if we have any other news coming out this morning to add to our trading. Let's see here. Let me get rid of some of these. A second. Thanksgiving was good, and the girls were over, so everybody's behaving. That's even better. All right, let's see here. Today, 9 o'clock pending home sales. That's what's coming out here at 9 o'clock. And 9:30 Dallas Fed survey. And then there's a Fed speak at 2 o'clock, in case anybody's wondering. As we are just kind of, like I said, we're just kind of hanging around this 40-39 area here. So it's giving you choices. Hopefully, you've made some choices here as to how long you're going to hold on to a trade and what we're going to do with it. All of this is part of trading and working an area. And this is what we're doing here. We're not getting our rotation that we're looking for, not initially. So maybe you're taking some profits, a little bit of profit here against it, or maybe you're, just decided to get out for a scratch. But it's definitely giving you choices here. Again, giving you a little bit of a profit. We're not getting the rotation we're looking for. And so you can exit and always look for the next opportunity. Or you can try to hold on. Everybody, like I said, trades differently, but make sure whichever choices you make to keep your stops in place and then let the market kind of do its thing. So is there one right way of doing this? No. There's everybody trades it according to their risk tolerance, so you have to adjust accordingly. And that's what we try to work with each individual here to adjust their trading risk tolerance to the market conditions, and then that way you can maximize profits according to your risk tolerance, because everybody, again, doesn't trade the same. So again, I've given you many choices here as to what you could do with the trade, how you could manage it, and that's what you're doing here. You're managing this trade right now as it is whipping around. So just kind of deciding what it wants to do, came to this little support area, and the market is just kind of hovering here, kind of trying to figure out what it wants to do at this point. So a little 9 o'clock number, fundamental number that's going to be released here. Again, the overview of the market is this new variant that they're talking about, Omicron. They literally discovered Omicron coronavirus variant has a world on edge with lots of questions surrounding its infectiousness, ability to cause serious disease, and to what degree it's able to evade the immune response from prior infections or vaccinations. The strain first identified in South Africa was dubbed the variant of concern last week by the World Health Organization, sparking fresh worries it could prolong the nearly 2-year COVID-19 pandemic. While no cases of this variant have been identified in the United States, the CDC is continuously monitoring the situation. Many say it's only a matter of time. The Omicron variant has about 50 mutations. More than the 30 of these are on the spike protein that provides the virus to bind to human cells. The receptor binding domain, the part of the virus that makes contact with our cells, has 10 mutations, which is far greater than just 2 for the rapidly spreading Delta variant. High level of mutations mean that Omicron likely came from a single patient who could not clear the virus, giving it a chance to genetically evolve. A similar hypothesis was proposed for the Alpha strain. A little technical stuff as to what we're doing here, what this virus thing is here. Again, if anybody has any questions, please feel free to ask in the chat box area. We have no problem asking questions. So just put them in the chat box area and we will try to answer the questions for you. As the market is kind of floating back down here again, we talked about, staying with the trade, probably not giving you a chance to exit the trade. as we continue to downtick, coming down here to the we got down here to the 30. Well, got down to 32. We have 31. So again, we talked about how long to stay in a trade. We talked about the opportunity there was to maybe get out of some, take a little bit of profit against that 39 area, only because the market was kind of hesitating there. And we did get in. If you did get in against the 31 area, the 32, you got a quick pop back up. Got a nice quick little trade there as we come down here again. Again, make sure you keep your stops in place no matter how you trade this. And we suggested many ways of trading it when it was hanging around the 39 area. Now we're coming back up here to, or down here to the 31 area. Again, keep your stops in place no matter what. Trade it accordingly to your risk tolerance. Maybe lower the number of contracts if you're trading multiple contracts. Keep everything focused in on your risk and how you're going to manage it, because everybody trades at much different. Nobody here trades the same way. Okay, nice rotation there off of the, well, trying to get a rotation here off of the 31 area. All right, nice little pop back up here. Again, your scale is also, a little bit wider, right? So especially maybe since we're going down, maybe you're scaling to the downside only. Again, those are different options of how you could trade this, right? And I got a nice little pop here off of the 31 area. Got 4 points on this little trade here. I'll close on that we have. So nice little pop there against the level. We got our 5 points here. And that time you only took a little bit of heat there, only down to 29 and change. So not a bad little trade here against the 31 area, where we're, again, trying to find these areas of inflection that creates opportunity for us. And a nice little pop here off of that level. So again, staying focused. We talked about working the 39 area. Then we talked about coming back down here. So if you work the 39 and maybe you got out of some or all, then you were ready for the 31 area when it came down there for us, and we got easily 5 or 6 points on that trade. And it's moving around, so you're going to get opportunities. So you don't have to worry about that. The first South African physician to raise an alarm over Omicron has called it a symptoms unusual but mild. For example, none of her patients experienced a loss of taste or smell, considered a hallmark of the disease, but rather showed up with body aches and feeling so tired, according to the doctor. Other South African scientists and health officials also said there's no sign so far that Omicron led to more serious illness. Americans need to be prepared to do anything and everything to fight the Omicron variant, the White House chief medical advisor said on Sunday, adding that it's still too early to say whether a lockdown or new mandates will be appropriate. More definitive information will become available in about 2 weeks, though. It's important to take note that the variant of concern, like the South African Beta and Brazil Gamma, did not take off around the world as initially feared. There are lots of unknowns, said a UK person. It's so important to stress how much we don't know at the moment about this new variant. And this is why markets react. They don't like uncertainty, right? Markets do not like uncertainty. That is the one thing that we've always talked about how markets like things to be in an orderly fashion. They don't like craziness, and then they don't know what's going on. They just panic. That was obviously the case on Friday, as some countries like Japan and Israel has already banned international travelers, and they just opened up that just like a week ago. So this is again, people do panic. So this is what happens, and the markets don't like panic, and it panics when there's uncertainty and panic. They panic. This is what's going on. Even before Omicron, many European countries began reimposing pandemic restrictions in response to rising coronavirus cases. Australia shut down. Germany flirted with another national lockdown, while Belgium announced it would close nightclubs and prohibit private parties except for weddings and funerals. The focus is now turning to travel restrictions in the countries, which has so far been detected in Australia, Belgium, Britain, Canada, Denmark, Germany, France, Hong Kong, Israel, Italy, and Netherlands and Scotland. What's happening is far more of in the most far-reaching efforts. Japan joined Israel in banning all entry of foreigners, while Morocco said it would suspend all incoming flights for 2 weeks starting Monday. Australia reversed its border reopening plans, while the Philippines ditched the idea of letting in vaccinated tourists. Over in the United States, travel will be restricted for non-United States citizens from South Africa and 7 other countries starting today, even though there's no indication of how long the ban will remain in place. See, everybody's got different, everybody's panicking, So markets don't like uncertainty. That's what we got here. Friday's trade, a little craziness today, but we like trading, so we like the opportunities. So stay focused, keep your stops in place, and trade whatever the market gives us. Sometimes it gives us good rotations, like we got here off of 31. Sometimes we have to work a level. Sometimes it's going to rush through. Either case, you're going to have to, trade it according to your risk tolerance. And in that way, you can maximize profits. And if anybody has any questions, please feel free to ask. Those of you who just joined us, if you look at the chat box area, you will find the levels that we gave out this morning. You can see here, support level there at 39. We talked about how we had to work that level a little bit. Then we had down here support at 31, which we had a nice rotation off of. We're probably looking at 5-point profit targets. I'd say that it's a good number to look at. And with the same amount of stops at this point right now. Probably on Friday, if I was trading and with light volume, I would probably told you 10 points. But again, we weren't trading on Friday. But the volatility is still here, as we talked about the VIX being up at 24. We do have a VIX is trading at 24. We do have a small number coming out here. Every fundamental is going to be small until we have this overriding issue resolved with the Omicron. In addition, this week to this situation, this is going to be the first week in December, which means Friday is going to be unemployment. And, we do have holiday. December is usually slow. This could throw a wrench into that, especially if numbers start spiking up or this thing starts getting a little bit crazy. We might be a little bit busier. So we shall see what happens. But Friday is unemployment for December, and once we get past all the fundamental news that's going to be out, this month in December, I should say, as today is obviously we don't have much. But tomorrow we've got consumer confidence, Chicago PMI, And then Wednesday, we've got construction spending, ISM manufacturing. Thursday, we've got jobless claims, and then Friday, the unemployment number. So kind of a busy week in regards to fundamentals. And then, once we get past, I would say, the 17th of the month, halfway through the month, then the fundamentals, as far as any news is concerned, is going to be minimal. And so it's going to be kind of, for the next couple of weeks after that until New Year's, is going to be kind of quiet, at least it normally is. Okay, but we are far from normal these days. So we'll see what happens. But just giving you a quick overview of December, we don't know what's going to happen, especially with this new situation that's evolved as we quickly come back up here. So nice little trade there against our 31. If you wanted to stay long, maybe you did, maybe you didn't. I don't know. But if you did, nice little trade. And this is probably where you wanted to get out, which is the 39, but it's also our blue band as well. So nice little quick scalping opportunity there if you did trade the 31 level. We talked about how we worked the 39 for a while there. So now we'll see what it wants to do. The next support level we have is down at we got 24. Let's see what it wants to do down there, if it ever gets down there. Go from there, right? We can only trade what the market gives us. This trade ebbs and flows of the market. That's over here. Again, if anybody has any questions, feel free to ask. Futures for three major U.S. stock averages rose overnight as investors considered the potential effects of the Omicron variant. Stocks previously sold off on Friday, with Wall Street suffering its worst day in more than a year, in an echo of panic that swept through the markets when COVID was spreading in early 2020. The frantic response has more to do with fear of lockdowns and restrictions on the economies, as well as worries that the variant could stall global recovery. WTI prices rebounded more than 5% this morning to retake the 70 level, while travel industry shares inched up after a bloodbath before the weekend. A flight to safety also saw Treasury yields tumble 15 basis points to 149 on the 10-year, but it regained to the 154 level overnight, and it's probably a little bit higher this morning. Cryptocurrencies are in the green, with Bitcoin rising 4.5%, and that got pummeled on Friday as well. So definitely risk trade was going on there, right? Bonds higher, equities and everything else lower. That's a risk trade. That's called a risk-on trade. All right. While central bank commentary has been focused on the upside risk of inflation, the new COVID variant highlights that there are more significant downside risks, and we are in this significant phase of uncertainty for the economy, said some analysts. Volatility is likely to ensue as more details about Omicron emerges as the market heads into December. The macro backdrop will be important to watch, specifically the jobs report on Friday, as well as the inflationary environment continues to gain steam. Investors are also eager to assess the coming rate hikes from the Fed, but Omicron could put a dent in the central bank's plans if new risks arise to economic activity. Now, of course it does. Of course it does. All right, we are here. It looks like if we get above the 42 area, we might push a little bit higher here. So keep that in mind if you are trading. You get above 42, you definitely don't want to be short anymore. Number is just released, that home sales number. Again, unfortunately, with this new focus on the market, fundamentals kind of minimized a little bit, except for, of course, unemployment, which everybody looks at. So careful here. If we get above the 42, we might have a little rally. Buying opportunity here in case it gets up there. Okay, if anybody has any questions, feel free to ask. Again, you have a tight little stop. I suggested anything above 42 out of any shorts. Got up to 41 area there and rotated down. In case you were looking for a little scalping opportunity. So that was a little scalp there, got rotated down. So again, the markets are very whippy and moving around really quick. So keep your stops in place no matter what you do. And if anybody has any questions, please feel free to ask in the chat box area. All right, still whipping around here. Be patient, be careful, and wait for the opportunities. Inched above 42 for a second there and came off. Yeah, fake out, breakout move there. Not a surprise. Happens when markets are chopping around like they are. Well, I mean, the real estate market's going to stay hot because interest rates are low, period. I mean, there's really not much you could say about that, except for people are, concerned maybe about interest rates going up, right? And so that they're going to keep that market hot because of the potentially low interest rate environment, and that's what the Fed's been wanting all along, right? That's what they've been wanting to do. Rents are high too. Yeah, I mean, it's kind of making up for 2007, right? When things were the opposite, everything was crashing. But it is what it is. All right, this is chopping around. Probably called this the no trade zone that I like to call it. So you just it's staying on a little bit of a range here. Doesn't know which way it wants to go. It's flirting with the upside, flirting come back down. It's just chopping around. Again, if anybody has any questions, if you look at the chat box area or if you put them in the chat box area, I have that window up, so I'll be able to answer any questions that you might have. We are trading mini S&Ps here. We're looking for opportunities to scalp the market, and we also have to wait for the market to create those opportunities for us. We're not out here to try to create trades. We had our levels that we gave out this morning, and if you look at the chat box area, maybe you'll find them there. There they are. And those we're using as a guide to the day. We can add to them, subtract from them, tweak them a little bit. We have to trade those areas today with the volatility that's in there. We talked about how we had to work around the 39 area. Then we went down to 31. I had a nice rotation off of that. And maybe you traded the blue band there and on the first rotation up to it. If you did okay on that rotation as well. And now we're just chopping around here a little bit. So don't know where we're going or what we're going to do. All we can do is wait for the market to give us opportunities to trade. And if they're great, if they're not, we're patient and we wait and look for our trades. Next support level on the downside is down at 24. And right now, the next upside resistance is at 55, but they snuck it up there for a second above 42. I think if we stay above 42 and hold above 42, we might rotate it back up to the upper resistance areas. So we shall see. Right now, this area right now, I call it a no trade zone. It's just chopping around in a little bit of a range. Kind of, if you're a range player and you like to kind of trade, then you could trade it. Bonds perking up here a little bit. I don't know if we're going to see inverse trade or not. We've had it. Obviously the home sales number created a little push up here in the bond market. That was the fundamental number that was released just a little bit ago. Right. It's just kind of range bound here. Patience is important here, waiting for the opportunities. Can't really trade much when there's not much to trade, right? We are definitely at the mercy of opportunities that the market gives us. We don't like to go create trades. Now, there's different kinds of trades for everybody out there, right? Like if you're a range trader, you're kind of happy that this is happening and you're maybe trading the range. I don't know. It's not the trade that we like to trade, but everybody does trade differently. All right. As you can see, definitely range bound there a little bit. So no other economic reports out today with little Fed speak at 2 o'clock this afternoon. That's Chicago time. If you're going to be around there. Now we focus more on the morning hours to give us our opportunities to trade. Morning hours, for first couple hours of the day, I think we get good movement in the market. The dynamics of the market are definitely something that we like to focus in on in the morning. Again, range bound is where we're at, so keep that in mind. And patience is important. If you're a range trader, you're doing good on this. You like this stuff. Not my favorite trade, but everybody trades different, right? All right, bonds here kind of pop back up, not just kind of hanging. We are still in this range that market is found itself attached to. Yeah, that Michael, that would probably be, if we do get above the 42 and hold above the 42, we would target the 50, and then above that, we'd look at the 55 area. But yes, that would make doable sense if we can get up and hold above the 42. At least it looks like where the market wants to go. But again, it's range bound here. So the only good thing about this range boundness is that it is creating the opportunity for a little push above the 42. If it can get up there and hold it. Tried there once, faked everybody out, and then came back down, and got stuck in this range. So all right, again, still range bound here. Can't really, if you're trading the range, you're doing great, right? We talked about this range thing here for the last 20 minutes, so it's giving you a chance here to take advantage of it, but make sure you keep your stops in place because you never know, once it breaks out, it's going to break out. And if anybody has any questions, comments, thoughts, ideas you want to share, put it in the chat box area. We don't mind questions here. And we do have to wait for the market to create opportunities for us. The hourly looks like upward bias to use any smaller time frames. Yes, we are using the 5-minute on the right. The right chart on your screen is a 5-minute time frame. 5-minute time frame is a little bit bearish, even though maybe the hourly looks a little bit bullish. In either case, it's still range bound. Both of them are a little bit of range bound trade. Obviously, the hourly is a little bigger range bound trade since it's trading in hourly segments. But we look at the 5-minute chart is the chart on the right. That looks a little bit. It's just range bound. It's middle of today's range, pretty much 50, 30, and it's trading 50 is the high, 30 is the low, and it's trading around 40. So it's right in the middle of the range. The ladder looks thin because of the volatility. So the volatility is pumped into the market. So they're expecting bigger moves. So you don't have to, the ladder ticket's a little bit thinned out like somebody's mentioning. And that's because of the VIX trading at 24. But you will get good fills if you have, if you have orders in there. So if you're worried about that, I don't know. Again, we are still range bound there. You can see the blue band is holding tight. And anything above right now, I want to say 44 right now, it looks like we might get going to the upside. I guess maybe 42 was a little bit tight, but down 44 probably look for a little push to the upside if we get above that. Again, we are definitely range bound here, as you can see. And if those of you who are trading the range, blue band, we said anything above 44, you'll be out of any shorts. And so it got up to 40 and change up there. Maybe, you know, if you're looking for 4-point stop, you are getting a 4-point or more rotation to the downside here if you're playing the range game. So that is where we're at. We recommend any one broker. No, we're not partnered with any broker, but you know, if you're working with us and part of our family, as we say, then we would recommend somebody if you press me on it. Obviously, we know some people, but we don't work with any one brokerage house. All right. We're just, again, staying in this little range here, and now maybe down ticking a little bit. Trying to see what it wants to do. Looking for on the downside, our next level of support is down at 24. All right, we're just kind of hanging down here, coming back in the lower end of this trade. The market is just kind of whipping around here a little bit. Bollinger Bands work nicely for us. We adapted it to our work, and they seem to work very nicely with some of the things and concepts that we like to teach. So I guess that would be a yes. All right, next support level we have is down at the 24 area. looking at the 24 area there, get down to 575 there. And depending on how you're trading and how you're scaling in, everything here is in an individualized basis based on your risk tolerance. If you look at the website, you'll be able to get that information that you need in regards to the coursework. There was the link to the website. Just like you have it as fine hosting panelists. All right. Yeah, 550. It did get down to 550. Sorry. Did I say 575? All right, market again. We're looking at the 24 area. It did get down to 550 again. How you're scaling in? If you did get in 2 points above and below, 3 points above and below, whatever, you are getting paid off here a little bit. Again, everybody trades that much differently. There's not one right or wrong way. So if you did get in against the against our level, and if you didn't get in, that's okay. We'll see what happens. It's still kind of a viable number on the downside, lower end of the entry point there. So we'll see what it wants to do. All right, there, Chad. All right, we're a little bit chopping around here. All right, coming back down here again, maybe going to retest the 24 area. Obviously, you know, scaling in, what area you're looking at to get in is dependent on your risk tolerance. We talked about getting in at the lower end of our scale there. If you are looking to scale in, can we get the levels in the chat again? There they are. Okay, nice little rotation there off of our, if you made the adjustment to get in a little bit lower than the 24 because of the price action, then you get paid off here. Maybe you got in there 23. A nice little pop back up here. Again, you could make that adjustment big because of how the market acted prior to that. Got down to 25 and change there. And I said it's still viable. Level was still doable. And you just had to adjust a little bit lower on the entry point. And this is how we make adjustments to market conditions and volatility, right? We are definitely having to adjust as the trade goes on, right? I mean, that's what we do here. And so we adjusted a little bit there so that we can get a better entry point with a better rotation for us to take advantage of that. If you got into 25 as well earlier, then you did okay there too. Well, I had to get into 26 and change there, or 25, I don't know, whatever it got down, 550 it got down to. So depending on how you scaled in against that 24 area. Again, not everybody trades the same, so it's not like if you didn't do it, we made the adjustment to the downside and you did okay there. Now we're coming back down here. Next level of support is down at the 18 area. So we have 18, then we got 06, and below that we've got 96 and 88. Below the 06 here, we got 18 is our next level of support, then 06, then 96, and then 88. In case the market, oh, and they are up there already. Ooh, right on top of things there. There are the new levels in the chat. Those of you who didn't write them down, they're right there for us. Market is stayed a little weak. Obviously the blue band held the market down. Don kept it lower. Don got his target because of the blue band. He can thank the blue band, even though he hates it. He can thank it this time. And for those of you who traded the blue band against, we suggested an exit strategy above 44. And if that occurred, then you did, you maybe stayed short against that when it got up to 40 and traded 40 and change up there, as long as you knew where your exit strategy was. I bet you did. I bet you traded a lot on Friday too.
Hey, Kent, I just tried to ring you up. Just let me know. It's coming from a 347 number. So let me know if it rang.
All right, we're pushing the lows here, looking for next level of support there is down at 18. Again, if anybody has any questions, feel free to put them in the chat box area. We've been trading S&Ps here. We've gotten at least 4 or 5 trades so far today. Again, depending on how aggressive you want it to be, and how you traded the range or didn't trade the range, or how you traded the blue band or didn't trade the blue band. Again, everybody has different risk tolerances here, so it doesn't mean that you had to trade all those opportunities. They're there. As far as what the opportunities are concerned, we show you many opportunities to trade in our education course we offer. And we also take into account the volatility on any given day, which is what we have to be concerned with today, as the market here is definitely whipping around with the VIX up at the 24 area. We adjust to volatility by adjusting the number of contracts that you trade, scaling into our levels that we're talking about, adjusting sometimes because of the price action. All of the things that we talk about are part of what we teach in our education course to try to help you become a better trader and maximize profits, because everybody's risk tolerances are an individualized thing. Not everybody trades the same, obviously, and have to trade according to your risk tolerance to maximize your profit potential on every opportunity. All right. If anybody has any questions, you can put them in the chat box area. All right, they're done. Don is finally taking a break. He's had a rough morning. He's not rough in the sense that he's traded a lot, not rough as far as money is concerned. He's done well there. All right, market's still under a little bit of pressure. Just looking at the next support level we have is down at 18. Resistance right now would be around the 32 to 34 area. All right, we're get looks like we found a new range game area here. And again, if anybody has any questions, feel free to put them in the chat box. We are trading mini S&Ps here. We are using our levels to give us opportunities in addition to price action opportunities that occur. We've easily traded at least 4 or 5 opportunities this morning. On our levels alone, 3, a couple of good price action opportunities that have occurred as well. So that's on the low side, and there's been more. But again, it all depends on how much risk you want to take as a trader. We try not to overtrade. We don't like to overtrade. We don't like to give brokers money for no reason, commissions for no reasons. We try to keep it picking your spots, waiting for the opportunities. That way we maximize profits against the versus having to give our hard-earned dollars to the brokerage houses for commission. So we try to keep it quaint and pick our spots, and then trade accordingly to your risk tolerance, which everybody trades differently. Not everybody has to trade 4 lots, 5 lots, 10 lots, 1 lot. Everybody trades different. So I understand that, and you have to understand your your to try to maximize your risk tolerance according to what you are comfortable with. Again, we are range bound here. Again, new level. Could you have taken one of these trades? You probably could have. And could you have had a good reason to get in? Probably could have. But is it the range thing? Yeah. So again, we we always like to have reasons to enter our trades, and as long as we have good reasons into entering our trades, then we can. The reasons that you are comfortable doing, then you should, keep your stop in place and take the opportunity. Not everybody has the same reasons to trade. Everybody's different. You have to take the trades that are comfortable for you, how you find them, how you work them. Things that have worked for you in the past that you can recognize. Recognition of the trade is an important part of the trade here. You have to recognize the setup and then trade it accordingly. Not everybody visualizes the same type of setups, so you have to find the ones that you recognize and can trade so that you can maximize profits for yourself. All right, market again is holding here. We said the resistance around 33 to 34. If you are looking for that kind of opportunity, bond market rallying a little bit here. Coming pushing up here towards their highs. So you never know. Maybe that was the reason we kind of pushed to the downside a little bit ago. We said 34 to 30, 33 to 34 area. We got up to 32, 75 here and came off here. If you're scaling in, maybe you got in. Again, if anybody has any questions, you can always ask in the chat box area. The market is definitely going to be sensitive to different individuals saying things that could affect the market, especially if it's on the interest rate front or economic front, especially with the new this new strain of the virus. That's the market is concerned about. So that could create some volatility at any given moment, and that's why you have to be careful and keep your stops in place all the time. Need, desire, or request to go back up? Is it a need, desire, or request? There you go. Okay. Does have the blue band in the way though. All right, we're coming to a little resistance area here if you are so inclined. Let's see what it wants to do up here. If you are looking for a little scalping opportunity, maybe it's there. If it's too much, then it's all right. You can wait. A little opportunity here against this little area that we talked about, 33 to 34, and got up there to 3.5. And got filled there at 3.5 if you did get in there. All right, market up here now, trying to see what it wants to do. And maybe it wants to inch its way up. Who knows? Next. Okay, if you look at the chat box area, those are the levels that we're using as guide to the day. And thanks again for putting them up there, Mark. All right, we're coming here to the end of our morning session here. We're getting a little bit choppy here, kind of trying to hold. If we hold above 30, we might push up right now, but it's still chopping around here. So a little bit bullish, but we have to stay above 30. And if we get above the 44 area, we might rotate it, and we might rotate back up to to 50, and then possibly our upper levels there at 55 and so on. So the market is kind of coming back in here into the middle of the range that it's created intraday, and we'll see what it wants to do around here. But this is like right in the middle of the range that it's been at for the whole day. So we'll see if it wants to continue or just kind of float here for a bit. I'll get back here in a bit.
Hey, a couple quick programming notes. If you have any questions about these services, check out our website, tradealongtradingacademy.com. This is the live trade along session. This is a standalone service for those traders out there looking to come in as a guest to see what this is about. We also have subscribers in. Welcome, subscribers. If anybody wants to upgrade into Sol's trading course, we can talk to you on a private basis. Hey, Kent, nice talking to you. Appreciate it. We're here every trading day starting at 9 a.m. We go to about 12 noon based on this session. The body of the trading is being done between 9:30 and 11:30 on a daily basis. We're focused on the S&P 500 E-mini. This service is an intensive where we focus on trading 2, 3, 4, 5 trades. Sol is your host and mentor. He is a veteran of the trading pits in Chicago. He is actively scalping for his own trading account. We start out the morning by providing Sol's key proprietary scalping levels from an educational point of view only. Starts out with a pivot and other levels on top and bottom of that pivot. They were just posted in there again. You had 46. So 46, 46 as the pivot. Get 55, 65, 74, and 85 as resistance. Below you had 39, 31, 24, 18, 06, 96, 88. That's how we start the morning session, by laying out key levels for the morning session. Sol calls them his levels and zones. The action of price determines how the morning behaves. The action of price in the S&P 500 E-mini. Sol does a critical assessment right after the opening bell at 9:30. Critical assessment is based on how the market is behaving, what kind of action is happening based on momentum and follow through. You may see how the action of price coming into his levels looks, feels, based on his trading methodology. It's a great guide to the morning session when it comes to the action of price and the action of putting on trades, entries, exits, and stops. This session is a key opportunity for traders that know what they're doing based on their trading. They have a trading methodology. It's very well received with Sol as their wingman. Sol is a veteran trader of the trading pits in Chicago. Again, he is actively scalping and at risk based on his trading of his account during the morning session. This is a supplement for those that are part of Sol's course and his mentoring work in the Trading Academy. So we have individuals that subscribe for this service outright. We have individuals that are coming in here as part of Sol's bundle, where they are part of his private mentoring that goes on in a private Zoom room, where they learn his price action trading methodology. They can have their current trading methodology tuned up and focused. You'll learn how to set his proprietary scalping levels, and then the concept of what to do with those levels, the entries, exits, and stops, and the whys in private session, private Zoom room. You have your headset, your microphone, your charts. Sol has his. You can learn his trading methodology. You can learn how to set his levels. You can get tuned up based on the opportunity to have a trading tune-up. And you have access to this Trade Along live session as a proving ground and an access point to Sol during the live market as you're applying your new tuned up or found trading skills. So this session is for traders that have a trading methodology and they're looking for a concentrated session with discipline, access to Sol, his proprietary scalping levels, price action and trade action commentary from an educational point of view only. And you have the ability to be part of Sol's class where he teaches you on an individualized basis in a private Zoom room. You learn how he does his business, how he makes his money, and it becomes a long-term relationship opportunity for you as you're developing your trading skill in your trading business at your own risk. Hey, Bruce, how are you doing? Christoph, David O, Dean. Hey, Dean, Don, Edward, Frank, Jack. Hey, Joel. Ken, again, nice talking to you on the phone. Michael, Robert, Ronald, Roop, Russell, Tao. Hey, Timothy, Tony, Vincent, Yee. So I'm going to send out the opportunity to sign up or review the website to sign up for Sol Services. Take a moment to do that. Those that are on the fence, jump off the fence, get yourself involved, join the family. If you have any questions, you want to talk personally and privately about you and what your interests are based on your trading career, let us know. And we can set up a private time to talk with you. Right now it's 11:27 a.m. on November 29th. Everything we do is for educational purposes only at the TradeAlongTradingAcademy.com. If you're coming in and you're interested in joining us on a daily basis, or you have a friend that you'd like to invite in, go to this domain. It's TradeAlongLive.com, TradeAlongLive.com, TradeAlongLive.com. And again, if you have any questions, don't hesitate to post them. If you want to talk on the telephone, you can ring us up at 312-685-2582. That's the Chicago Exchange, 312-685-2582. But go to the website, TradeAlongTradingAcademy.com. Review the website. You can register there. You can join us as a subscriber in the service on a daily basis. And all the best in your trading.